Good afternoon, everyone, and welcome to this biannual update of our funding forecast. My name is Ragnartz. I'm head of debt management. I will just give a brief introduction and then I will leave the word to Erik Törnblom, who is acting head of research, and then on to Tobias Landström, deputy head of debt management, who will present the latest funding forecast. To summarize the last year, we can say that it has been a very different year, an extreme year. We had barely left the pandemic when Putin decided to launch a full-scale and brutal war on Ukraine. And apart from the humanitarian catastrophe, it has also affected the financial markets via, for example, the energy prices. And apart from the war, and partly because of the war, inflation has returned in a way that few or no one anticipated just 10 months ago. We see central banks hike rates in a pretty drastic way. Volatility in all or most parts of the financial markets are at historic highs. So all in all, a very challenging year. But for Kommuninvest, happily, the year has been much less volatile and challenging. We have had actually another good year of growth and good support for our bonds, both globally as well as domestically. Maybe it is a consequence of our focus on large and liquid markets. In other words, the dollar market, euro market, but also the Swedish market. And more likely also because of our AAA rating and our reputation as a safe and stable issuer. So far this year, we have done 7 benchmark bonds, 6 in the dollar markets, and finally, we did 1 in the euro market. And finally, I say because we decided on this a couple of years ago, 2019. And our hopes going forward is always for a larger allocation to the euro market. But we are, as you all probably know, price sensitive. So the allocation to each market depends on the price hedged back to Swedish krona. So this also makes it pretty easy to understand what and why we issue, and why we issue in the way we do. But overall, and especially given the extreme volatility and the lack of liquidity in some markets, we are satisfied with the year. And what comes next year, that of course depends on the financial position of the local municipalities and regions in Sweden. And with that short introduction, I hand over to Erik Törnblom, who will give you a description of the state of the sector. Erik, please.
Thank you, Christian, and good afternoon, everyone. My name is Erik Törnblom, and I'm acting head of research here at Kommuninvest. I will present our view of the economic development in the Swedish local government sector, mainly from an investment and debt development perspective. And if we look at the recent macroeconomic development, with high inflation rates, it is significantly affecting the economic development in municipalities and regions. For example, high inflation causes sharply increasing pension costs, increasing costs for indexed rental agreements, and higher heating costs. And in this graph, we can see the development of the local government tax base in nominal and real terms. And in nominal terms, the blue bars, the increase is quite stable. However, in real terms, the gray bars, that is considering those increasing costs, the tax base is expected to decrease by 2.7% in 2023, followed by a small increase in 2024 and the recovery in 2025. So this development means decreasing purchasing power in the local government sector over the coming years, leading to lower net income. But it's not only net income that is affected by increasing inflation, but potentially also investments. So if we look at the 2 graphs on the next slide, as you know, both interest rates and building costs has increased rapidly. And the graph on the left shows the increase in short-term interest rates, here illustrated by the 3-month STIBOR in blue, and longer-term rates illustrated by the Swedish 5-year swap rate here in gray. And the 3-month STIBOR has increased from 0 to 2.5% over the last year. It's not a very high level from an historical perspective, but the increase is sharp, and the interest rate sensitivity in the economy is higher than before because of increasing levels of debt. The graph on the right shows the growth rate in the building price index for multi-dwelling buildings. In October, the increase was over 15% in comparison with the same month last year. So this has meant that the willingness to invest has decreased in the local government sector in general, but especially in municipal housing companies. Recent estimates indicates that the number of started dwellings will fall by as much as 40% in 2023. But if we're looking at the investment level, on the next page, we look at it on a group level, divided by municipal companies, municipalities, and regional groups. And we have seen a rapid increase in investments over the last decade, with an average yearly growth of around 7% in nominal terms. And this development has mainly been driven by population growth, but also high renovation needs in existing properties and infrastructure, and of course, low capital costs. But already in 2020 and 21, investment levels decreased, and this likely reflects difficulties to carry out planned investments during the pandemic. And as we saw in the previous graphs, interest rates and building costs continues to dampen investments in the coming year, especially in the municipal companies. And in addition to this, recent population forecasts indicates that population growth will slow down over the coming decade, and that means further downward pressure on investments. On the other hand, the renovation needs in the local government sector are still substantial, and although population growth is decreasing, the population is still growing, just at a lower pace. So if we continue by looking at the local government debt, based on the factors described, our forecast for the local government debt performed in September indicates a lower growth rate for the current and coming years, 3% in 2022, and 4 and 5% in 2023 and 24 respectively. That is compared to an average of over 6% over the recent period in nominal terms. And the reason that we did not revise down the forecast even more is that besides decreasing investments, we also expect net income to decrease. So that means that the degree of self-financing is also expected to decrease. And this which to some extent maintain the need for external funding. However, making forecast is hard, and especially so in this macroeconomic environment. So if we look at what has happened over the last quarters, on the next slide, we can see the development of Kommuninvest lending and bonds and commercial papers issued by municipalities and regions until the third quarter this year. And by doing that, we can get a good indication on the recent development. Kommuninvest lending on the left-hand scale constitutes around 60% of local government debt, and bonds and commercial paper on the right-hand scale is around 30%. So combined, this is 90% of total debt. And by looking at this, we can see two things. First, Kommuninvest market share has increased during the first 3 quarters of the current year. So as Christian put it, we have a solid position. And second, as Kommuninvest lending has increased by 15 billion Swedish kronor, the volume of bonds and commercial paper has decreased by 17. So it indicates that local government debt has remained unchanged or even decreased a little bit during the first 3 quarters in nominal terms. And thus, our forecast may have overestimated the growth rate in the current year. But if you look at the last slide, we can conclude by zooming out a little bit by looking at the Maastricht debt to capture the long-term trends of public debt in Sweden. And by doing so, we can end on a little more positive note, because central government debt, the blue line here, has decreased substantially in relation to GDP since the financial crisis in the 1990s. And local government debt, the gray line, has increased during the previous decade, but seemed to have reached a maximum at the end of 2020 in relation to GDP, and then has decreased. So the general government debt, that is central and local government combined, is at 33% of GDP, and that is actually below the debt anchor in the fiscal framework and among the lowest levels in the European Union. So in conclusion, the macroeconomic development are putting pressure on Swedish municipalities and regions, especially in 2023 and 2024. But in a wider perspective, the financial strength in the local government sector has been stable. The net income has been on high levels during the last years, and the debt equity ratio has been stable or even slightly decreasing. Also, the central government budget for 2023 is quite restrictive in order not to be inflationary. However, if we enter into a recession and inflation plummets, the central government have room for more expansive fiscal policy, including increasing government grants to the local government sector, which in that case will dampen the effect on the decreasing tax base. I'll stop there. I'll leave room for Tobias.
Excellent, thank you. So as Erik said, the economic situation in the municipal sector is still stable, and they went into the year with a good result. But as always, when we present a forecast, it comes with some uncertainty. This time, maybe even more than before, we have rising rates, inflation that's still uncertain on where it's headed, and currency moves that's significant. So when we publish this funding forecast for 2023 of 130 to 150 billion Swedish krona, it's not to be viewed as something that's set in stone. It can more be viewed as a slightly moving target. This will be funded in our three strategic markets: Swedish krona, US dollars, and euros. And we have a very conservative liquidity management and a strict ALM policy, where we match the tenors of funding with the tenors we lend. We strive to keep our excess liquidity fairly short. So far, this year, we have funded approximately 140 billion of long-term funding, and this includes our 500 million euro transaction. It's our first benchmark transaction in euro, which we are very happy about, and we hope that many more will come in 2023, both labeled and unlabeled bonds. This year's funding has been issued in approximately 50% in Swedish krona, and the rest in international markets. We also issued our first US dollar transaction, which were hedged with SOFR, and we introduced a new bond under our Swedish krona benchmark program, which was K2903, that matures in March 2029. As mentioned earlier, our three strategic markets are Swedish krona, US dollars, and euros. And since a few years back, we took a decision to focus on benchmark transactions. We follow all markets that our fellow peers are active in very closely to see if it would be beneficial for us to open up new markets. But currently, we still consider the benchmark strategy that we have to be the most effective in the long run. You can see on the two charts on the right-hand side that since 2018, Swedish krona and US dollars are the two dominating currencies. On the top chart, you can see that Swedish krona is significantly larger than US dollars. The reason is that the majority of dollar transactions that Kommuninvest issue is usually 3.5 years or shorter, while in the Swedish market, longer tenors have been more cost effective for us and have worked well with the market, so US dollar bonds mature more frequently. We also issue in green bonds. We issue green bonds, and that's included in this graphs. The volume that Kommuninvest issue on a yearly basis is being determined by the volume of bonds that redeems, estimated growth in lending volumes, and also a potential increase in the liquidity reserve for the next 12 months. And when it comes to timing of issuance, since we match funding with lending very thoroughly and strive to keep warehouse liquidity longer than 1 year as small as possible, we issue when our owners borrow from us, and we match the tenors of our funding with the tenors of the lending. Looking at the maturing bonds that we have for 2023, worth noticing is that we have approximately 21 billion Swedish krona that matures in green bonds, which will be financed during 2023. When it comes to deciding on which markets we are to be active in, we take into consideration what tenor and size do we need. Once that's confirmed, we investigate in which markets can we find an investor match and what's the cost for that. The price is very important for us, since the purpose and mission we have is to provide the best possible finance solution to our clients. The chart presented here shows the spread recalculated into Swedish krona in our 3 strategic markets in 3 years. Reason why we chose to look at 3 years is that this is where we see the bulk of the international funding have been issued historically. The euro transaction we issued in the beginning of the year was in 7 years, and it was favorable for us at the time to issue there, and we had a funding gap in that tenor which needed to be filled. When it comes to sustainable products, we have seen an increase in both the green and the social sustainable lending. We still see that we are the biggest issuer of green bonds in the Nordic SSA community, and we try to be active on a frequent basis, but we are dependent on growth and redemption of old bonds. We currently have approximately 63.3 billion Swedish krona of bonds outstanding, and we hope to see a steady growth on the lending. Lending for social and sustainable investments are slowly building, and we have now dispersed about 0.9 billion Swedish krona. And when we on the funding side looks at this and plan transactions, we focus on what's been dispersed, and that volume need to be built up to a critical mass before we can issue something. So we still need more projects in order for us to be able to issue our first social bond of relevant volume, but we hope that it can be done in not too far distant time. Finally, the short-term market we are active in are ECP and potentially the Swedish CP market. Price is a driving factor, and also the possibility to issue large volumes if needed. The activity in the ECP market vary over time, but the outstanding volumes are usually between 2 to 7 billion euros equivalent. But we can issue in dollars, euros, sterling, and a few other currencies. Since we have a few balance sheet based fees which are being observed on the 31st of December each year, size in the CP program tends to be smaller at that time. And we predominantly use the short-term liquidity to fund collateral positions and the liquidity portfolio. So this concludes the presentation, and now it's time for questions. And I can see that we have received one question, which I will read out, and I can answer it as well. It's from Mats Sydén. Will Kommuninvest consider to issue bonds outright in 2023 instead of only against swaps? And I assume you're talking about Swedish krona and the Swedish krona bonds that we do. And this is one thing that we have been looking into for quite some time, and investigating whether we can do it, and whether investors prefer it and market makers prefer it. Unfortunately, during this year, there's been great volatility in many underlying rates, etc. So we have paused that work, but it will be something that we will pick up again in 2023. But we can't promise anything. It depends on a lot of different factors, but it is something that we will be looking at for 2023 and see whether we can change or will change into outright issuance. Let's see, here's another question. What is your experience of scheduled auctions in comparison to on-tap issuance? Any change on-tap issuance will be resumed? That's also a question that's related to our Swedish krona benchmark program. And just a short introduction to those who's not involved in the Swedish market. Kommuninvest have since 1.5 years back started to issue auctions every Wednesday between 9 and 10 CET. We auction out a predetermined number of bonds, which our experience is that it works very, very well. It's very effective. The market itself, investors can put in bids on the bonds that we auction, so we get the right price, the right level. I would say it's not Kommuninvest that takes care of the pricing of our own bonds. It's the market. The market does that. And I think that the market in general appreciates the transparency and knowing which bonds and which days there's a possibility to buy them in the primary market. So I think that unless we say anything else, this is definitely a way for us to keep on issuing in the Swedish market. I don't know if you want to add anything to that one, Christian.
No, I think that you explained it well. No further comments.
We have another question here. Are you concerned about market access in 2023? Crowding out increased net supply, less potential windows? And would you be prepared to pay higher concession to get deals away? I think this is definitely a question that needs to be taken very, very seriously. Looking at the market now in 2022 and the volatility that we've seen, and also the focus that's been around central bank meetings, inflation numbers, etc. It has sort of created the windows that used to be, I wouldn't say easy, but it used to be another market, and now you really need to seize the moment when there is a moment. So it's definitely something that we are thinking about. It's definitely something that we are slightly concerned about. If the market demands a higher concession, it is something that all issuers have to pay. So I think we need to be pragmatic, and I think we need to listen to the market and look at the potential windows much thoroughly than maybe what issuers in general have done historically.
Yes, and I would just like to add there that, I mean, liquidity in the market is a key concern, not only for us, but I believe for every issuer. Hopefully, the end of QE will bring back some liquidity to the market, and also the fact that bonds nowadays actually present a reasonable return option compared to other assets is maybe something that could help out. But it's a most relevant question and something that we will much closer follow and in a dialogue with the market consider when we issue.
We like the question, so please, if you have any more questions, type it in now. Otherwise, we'll wait for another 15 seconds to see whether there are any more questions. Okay.
No more questions. Then we say thank you for attending this presentation, and we look forward to seeing you all next year. Thank you very much.
Thank you.